So there's a few things when you were talking that came to mind, right? One is venture capital is its own business with its own business model, and it was only ever meant to be appropriate for a subset of startups, right? It is not the appropriate source of capital for a lot of businesses, which is fine, but we've romanticized it in the popular press, and we've made it seem like that is the goal, that you win if you raise a big round. The capital is just a vehicle to growing a successful business, and there are multiple vehicles to obtain that capital. It doesn't have to be venture. That being said, when it is the appropriate source of capital and it is so inequitably distributed, we heard that absurd statistic from Alfonso, it almost doesn't seem real, right? Flip it around. Even let's take women as a whole. We get 1.8% of venture capital dollars. 98% of venture capital dollars are not accessible by women founding teams. Let's take Black founders, right? Let's split apart the Black women into the intersectional groups. Black founders get 0.5%. 99.5% of venture capital dollars are not available to Black founding teams. A lot of it comes down to this issue of signal processing and the risk tolerance and risk profile, whereby investors look for signals of new opportunities that match things they have seen before in successful investments that have returned for them. But it's a homogeneous data set. So you're looking for signals that you will not find in founders who don't match the demographic profiles of those who have already been funded. And so, it's a little bit of a long-winded way of explaining the mechanisms behind that. Why do we invest in people that look like us? Because we view them as inherently less risky, and we're matching that homogeneous data set. It doesn't mean that your returns would not have been just as high on both the social impact measurements and the financial elements.